We are seeing a massive paradigm shift across the globe. We are no longer in the experimental phase. We are building the permanent infrastructure of future finance.
Something that I want you all to pay close attention to is even though we're in this massive, huge market downturn right now, we're still seeing some of the most bullish things ever that I've heard in the last 10 years of crypto being said on stage. Take a second here and listen. This is from the 100 in Crypto event that took place just the other day. This is the founder and CEO of Be in Crypto. Listen here to what she says about the entire backdrop in regards to the digital asset ecosystem.
Tonight is about a convergence that would have seemed unlikely just a few years ago. Traditional finance and digital assets building something together. We are seeing a massive paradigm shift driven by spot ETFs, tokenized treasuries, on-chain credit, and smart contract automation, all supported by increasingly robust regulatory frameworks across the globe. We are no longer in the experimental phase. We are building the permanent infrastructure of future finance.
So I wanted y'all to hear that. She said, we are no longer in the experimental phase. We are building the permanent infrastructure of the future of finance. And that leads me over here to a question, or not a question, but a comment that I agree with from IM, where he said, I've been watching XDC and Canton, and they're sort of performing like safe haven assets. Now, I wouldn't necessarily say that they're performing like safe haven assets where they're increasing in value in this kind of market downturn that we've seen, but they're at least holding on to value that was invested into these assets at the beginning of this year when the market had its major downturn, right? So I want to show you all that. I posted this out to you guys yesterday. I put it in the Discord for you all, and I said, interesting store of value metrics during the most recent market downturn. Now, I need everybody to understand that this is not a biased, my chain is better than yours post, because it is not. This is simply just a fact-based post. It's research for any interested investor. And it's literally just something to consider, all right? We're all here to make money. And at the end of the day, if what you're investing in year after year after year is not giving you the financial returns that you would like, there comes a point in time where we're going to head into a future where I firmly believe if we do not cut ties with married biases, some projects are going to fall behind and some others aren't. Now, I'm not here to dictate which ones those are going to be. I'm here as an observer, just like you all, and I'm going to place my bets where, my money is going to perform the best. And so with that being said, accumulating this data in the now, I'm not saying that any of these assets are or aren't going to perform better than the other. I'm just observing. And so this is what I've observed. One of the more interesting things to watch during this most recent market correction, considering that from January at the beginning of the year until today, the total crypto market has lost over $700 billion of its value. I have been seeing which assets in my portfolio have actually managed to hold their value while much of the market moved lower. These were just a few to name some. If you had invested $1,000 on January 6, 2026, and the reason why I highlighted January 6, 2026 is because that was the high point of the total market cap for this year, right? $1,000 invested into Quant would still be worth roughly $1,000 today. $1,000 into Canton coin on January 6 at the market's high point for this year would still be worth roughly around $1,000 today. Same thing with XLM. In regards to Hype, which Hype was one of the best call outs that we had in this community, and again, to show timestamps so that way people aren't just like, oh, you're following the Hype trend. Hype, if you would have invested $1,000 on January 6th, 2026, it would have been a gain of approximately 170%, which would be worth around $2,700 today. In our community, you can see here, we did not get in at the exact bottom on January 6th here in this area on Hype, but I did mention to you all that Hype is a great buy for a long-term hold on February 26th when I noticed the Delta held pattern while it was trading at around $30, which if you got in, when we got in on Hype at trading at around $30, compared to where it's trading at now, you'd be up about 144%. And again, the reason why I was seeing this is because we were seeing the Delta held. We're seeing this here, this price action as the low that was swept, After that low was taken, what happens next? Effort by buyers. Then after that effort by buyers is thrown up, we can see the base was retested, creating the delta held for the 1, the 2, and the 3, and buyers from there continued. And on February 26th, I noticed that, and that is why I mentioned this to you all in that post, right? So HYPE today, as of time of recording, is the best performing asset in my crypto portfolio via my investments in 2026. Now, on the opposite side, to compare some names, and again, this is not biased. This might piss a lot of people off that are biased towards these assets. I'm diversified. You all should know by now that XRP is my biggest bag, not only in terms of holdings, but also in terms of value, dollar value, because of where I bought most of my XRP at. And considering where it's trading at today, none of my XRP is at a loss. But had you have invested $1,000 into XRP, your $1,000 today would be worth $500 because XRP is down from January 6th about 50%. $1,000 invested in January today would be roughly around $730, down about 27%. So I said here, it's very interesting because for years, Bitcoin was viewed as a primary store of value within the digital asset space. Yet during the most recent downturn, several utility assets have shown a level of resilience that many investors may have not expected. Now, I'm not sitting here saying that these prices of these assets are performing well, but at least had you have invested your money into these assets, it would still be worth relatively similar or the same today, which is still a good sign, right? In my personal opinion, as an investor, the goal is not to lose money. Even though we're all trying to make money, sometimes that's not the outcome. So at the end of the day, it's best to at least not to lose money. So I said the real question is whether we are beginning to witness a shift in the market, like that lady said, where we're moving from this experimental phase to real implementation phase. And as real-world utility, tokenization, institutional adoption, and blockchain infrastructure continue to mature, are certain digital assets starting to become a safer place for long-term capital preservation? Now, of course, it is way too early to make any definitive claims, but the divergence in performance is difficult to ignore. The market may slowly be transitioning from rewarding narratives to rewarding actual utility and adoption. And this is just, again, something I'm highlighting. So here are the screenshots you can see. Quant, $1,000 invested on January 6th. Yesterday, when I screenshotted this, would be worth $1,000 June 2nd, give or take the fees, right? Same thing with Canton. $1,000 invested into Canton would be worth the same on June 2nd, yesterday, when I took the screenshots. XLM, same thing. January 6th to June 2nd would be worth the same exact amount. As for XRP, that is not the same story. And so this is just an observation. There's no action behind this observation yet. I'm just observing, right? So something very interesting that I was paying attention to. Now, with that in mind, we have Gilbert Verdian sitting on stage just the other day, considering that Quant is one of those assets that had, maintained most of its value from the beginning of the year through this $700 billion market downturn. And I wonder, as a utility investor, if it's because Quant underneath the surface is actually being utilized, right? Gilbert Verdian said on stage just a few days ago, it is very important to connect the plumbing between banks, and that is what Quant Network is doing. It is time to evolve the financial system. Take a second here and listen.
Yeah, I think that's a very key word. So interoperability means a lot of things. On a technical level, that's a problem that's been solved, and interoperability is something you do industry-wide. You don't do it on your own. You don't build technology as a proprietary thing. You do it with the whole industry and with regulators on the journey. So with GBTD, we're building the new generation of payment infrastructure for the UK, focusing on the B2B flows. But the difference is it's digital money, not electronic money, and it's programmable. And so what this means to us as end users is you will have programmable bank accounts where it's a sort code and account number as it is today, but you can program money to do things for the first time. And the experience is I'm sending pounds. I don't need to worry about what type and what color and what brand it is. It's a pound. It has to work across the system. So it's very important to connect the plumbing between banks, interbank, between capital markets, between different venues, and between the legacy systems as well, because the pound has, and we call it the singleness of money, the pound has to work across all rails. And I think it's, why we're here, it's time to evolve the system. We built faster payments that went live 2008. That's more than almost 20 years ago, right? 2007, sorry. Now we're building the next generation of what the next 20 years is going to be. And it's very critical to build with that interoperability in mind that works across the different ecosystem.
Right. So just something to consider. Gilbert Verdi and Quant Network, they're still working hard in the background to help change the plumbing of the financial system. And that was confirmation from an event that took place just a few weeks ago. This is relatively recent, within the last 30 days. Um, Again, shout out to the CYPRX researchers for that. Now, also considering that historically speaking, XLM and XRP's price has moved relatively the same over the years. I've been an investor in both assets for literally since 2016, 2017 timeframe, so 10 years, give or take. And they always move the same. Now, for the first time, this most recent surge that XLM's price had, XRP price did not reflect that. And as you guys can see in the screenshots that I just showed you, XRP's price is down over 50% on the year. XLM actually held its value from the beginning of the year had you invested into XLM. Now, I'm not saying that XRP is not being utilized. Again, by any means, it's not biased. I'm just paying attention to detail and I'm listening to what these individuals are saying here and correlating that with the actual data, not data that I want to like make up and believe, but data that's actually here that we can see results from. So this is what Danielle Dixon said here. Let me play this video clip at roughly about 5 minutes. Listen to what she's asked and listen to how she responds.
To see you as well.
It's great to have you here.
All right, Danelle, I just want to start with a big picture question for you. Lay the foundation for us. When we think about this partnership, talk to us about the future that you're building towards when it comes to tokenization. I know we got some numbers out of Citi this morning predicting that tokenized securities will go to $5.5 trillion by 2030. But what are you working towards?
I mean, we're working towards all of that. The truth of the matter is we've been doing this for the last 14 years, and really Stellar was built for exactly what's happening right now. And just in the last few months, if you think we crossed $1 billion in tokenized assets on Stellar, or on RWAs on Stellar in December, we're now at $3 billion in just 5 months. And that's kind of crazy. So we're watching this market just really, really take off. And I think that this partnership with DTCC just demonstrates that when you actually build for institutions and you build for compliance and with all of that in mind, the assets come. And so for me, I look at this as just like the moment Stellar was built for. There's so much more to come. But I also look at it like that real shift of watching these institutional players really take this technology seriously and understand the value, not just to their retail side, but also to all the businesses that they build with.
Okay, so let's just...
Right. She mentioned institutions really starting to pay attention to this technology. And we see that XLM had a substantiating surge, give or take a few days after the DTCC announcement, and that it retained most of its value from the beginning of this year. Interesting stuff to just again consider. Next, she talks about how they are ready to handle quadrillions of dollars at Stellar. Listen to what she says here when asked this question.
Yeah, I mean, Stellar's been, it's one of the oldest blockchains. It's has 99.99% uptime. So from that standpoint, we feel pretty good about it. There are billions of transactions that are processed on Stellar every quarter. And so when we think about the network is ready for it. The volume is going to take time to creep up. It's not going to be the quadrillions on right away. But I think, you always have to look at scalability as being your bottleneck. And so it's something that we focus on a lot. We focus on it not just with respect to making sure the tech stack has that security in it, but you also need to make sure that it's going to scale so that you can continue that uptime, because that's what these folks care about. You can't have a network halt when you're processing these types of transactions for an institution like that. So it's one of the things we always pay close attention to. But but the scale is not going to happen on day one. It's going to take time, and then you'll see like the things that you need to be able to bring into it. I'm really excited about that. Like it's one of the things that we've always built for institutions. We always have really focused there, even when the institutions weren't there. So now to see the institutions coming to it, we're ready for this.
So let's talk.
Right. So I just thought that that was interesting. And what I really like about her perspective is she puts things in a realistic viewpoint, where any of the moon boys that are like, this is going to happen in a flip of a switch and all that stuff. She literally says that quadrillions are coming, but it's not going to happen overnight. It's going to take time. And that alone right there gives me hope in this current market condition that what we're about to see over the coming years ahead with the right picks in mind on certain blockchains and certain digital assets is massive asymmetric gains, right? But again, we cannot marry biases in this ever-evolving, changing landscape. And at least for me, not financial advice, I am willing in my own personal portfolio when the time comes to make the executive decision to maintain some exposure from digital assets that I had biases towards, but while also at the same time rotating into other digital assets that might have, in this cycle or in this next market valuation, whatever it is that we're going through, a better potential of surviving. Now, again, I'm not saying that the assets that I talked about today are going to be better or not than others. I'm just simply talking through my game plan. I am not going to get left behind because I married some bias and was unable to see that the devil was in the details, right? So, with that in mind, this also was a great share. This is from the Milk Road. So shout out to the Milk Road for this interview with two individuals from Bitwise. I just want to play two clips because we brought up hype. And one of the things that Matt Hugin talks about here is next generation tokens and how we are entering into an era where the tokens that actually provide value to the token holder are the ones that are going to survive long term. And investors are, of course, going to want to adopt those tokens more than others.
Everything has been able to do, and kind of what you're saying about it's a bit of crypto growing up, I think, which is what you called it, Matt, in your memo. You refer to it as a Gen 2 token for crypto, which I feel is kind of refers to what you just said, right? That it's kind of like this next generation of what these protocols and tokens can be.
Yeah, I think it's actually an important differentiation. I think you have these Gen 1 tokens for great protocols and great projects like Uniswap and Aave that are all very exciting, but the token capture mechanism is imperfect. Hype is really the first token in the post-Gensler era. And in the post-Gensler era, you can have value capture without going to jail. And so it does have that value capture. And I think investors are waking up to that reality. The reason I said it's the first Gen 2 token is I suspect there will be many more. I actually expect there's going to be a dozen of these major new interesting projects that actually attract value to the token and that therefore create this flywheel of interest and demand. In fact, many of the sort of failed projects of crypto's past, I bet, will be reborn as Gen 2 tokens. So I wouldn't be surprised if there was a whole new class of Gen 2 crypto tokens with strong value capture that become multi-billion-dollar protocols, some of which we don't even know the names of today.
Okay. And so considering that he just said that, again, this is coming from an advisor, a person from a large, I believe they have like $100 billion or something like that of Bitcoin on their balance sheet or something crazy. Like, why would you not want to listen to these people that have insights? And he's saying exactly what I'm saying right now, that like, if you marry a bias towards one dinosaur token, which I'm not saying is not going to perform well, because just like he said, he thinks that there are Gen 1 tokens that could still, capture value in sort of a way and still perform well. But there's also going to be a new set of tokens that perform very well that are this Gen 2, this new set of tokens. And if you have that bias that's like married towards one niche or one thing in blockchain or one asset, then you're likely, much more likely, to miss that train, right? So I'm just playing that for you all to reiterate this idea that I'm not shifting around my positions quite yet, but I'm also staying open-minded to understand that the assets that I might have been biased towards in the past cycles might not be the ones this cycle that perform well, and I will be paying very close attention to that. All right. Last but not least here, he talks about Hyperliquid, and he talks about all of traditional finance coming on chain and how well positioned the perps market is and how Hyperliquid is leading that space. And I just want you all to kind of hear the perspective of how undervalued Hype is, even trading right now at $75. Now, don't go out there and start FOMOing in at $75. Use strategy if you're going to choose to expose yourself towards the risk of holding Hyperliquid in your portfolio. But nonetheless, $75, even considering where it could possibly go in the future, is still peanuts in regards to what he says here. Take a second and listen.
Do you feel like Hyperliquid, this is an obvious question, but how well is Hyperliquid positioned to continue to capture that? And what do they need to absolutely nail over the next couple of years?
Yeah.
Be a big part of that, like we all think they can be.
Great question. Enormously well, right? Like half their volume is now non-crypto assets. As I said in my memo, I think this is one of the mistakes that people are making. They're evaluating Hype as playing on the $3 trillion crypto economy, not something 200 times bigger, right? That is their playground. It's all global assets.
Okay. If I math that correctly, he just said right now he thinks people are undervaluing Hype because it's playing around in the $3 trillion market, when in reality, it's way bigger than that, 200 times trillion than that. So if we're 3 trillion right now, times 200, that's 600 trillion. I'm mathing that correctly, right?
They're extremely well positioned. They're the best positioned within crypto to tackle that today. What they will need to do, obviously, is carefully negotiate the open, global, composable approach they're taking to the market with modern regulatory infrastructure. because right now they're attracting individual investors and they're attracting hedge fund investors and they're attracting some market makers. But there's a huge chunk of international capital that won't feel comfortable playing in the hyperliquid sandbox until there is more additional regulatory progress. Things like the ETF actually help because it brings access to the asset within a regulated wrapper, but it doesn't solve the core question. So I think that's going to be it. Look, one thing you're seeing in the market is everyone realizes that perps in particular are going to play a bigger role in our financial future than they are today. So you've seen large entities like ICE and CME push back on the growth of hyperliquid, specifically on that regulatory question, because they're trying to carve out their own space in this rapidly emerging sort of perps worldview. So I think the big thing they have to nail is how they balance their crypto native roots with the modern regulatory infrastructure and tap into a broader wave of assets. I suspect that they're well positioned to figure that out over the coming years, however, and we certainly have a regulatory environment that's relatively supportive for that sort of effort.
Got it. Ryan, what do you think?
Right. So that's Matt Hugin's perspective on hype. I thought that I'd throw those two clips in the mix, considering that we brought up hype was probably, if not the best performing asset, or at least one of them in 2026 so far. So that's my crypto spiel. I'll leave the floor open for open discussion for a second before we roll over and we take a look at what I'm doing on Metallicus, at least to a certain extent.